Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be now doing the review of the forecast, what I had given it on Monday. And also I recollected about the forecast on Wednesday when I was tracking the Forex market together webinar. And today we are on Friday, 17th of March. So I will try to review the forecast, what I had given it for this week, 13th to 17th of May, during this Asian session live market analysis and the forecast webinar. So first we will review the derived forecast, and later on I will do the market reading for today to find out what could be the possible moves based on the forecast, and also whether it is going to be in line with that of the forecast or deviate. Then give the trade calls, which we can try it in a demo trading platform. Now with regard to the forecast, you know that they have been making sideways move and then slide on Tuesday. Then Wednesday they made the slide and holding Euro and GBP before that of the FOMC interest rate decision. After that of the FOMC interest rate announcement and the press conference, we have seen that there was a very quick rise or a upward spike in the case of Euro and GBP. And they have been holding that particular gained levels, trapping the short sellers. And today they made a brief dip during start, just to give that impression that there could be the slide for the weekend, but they did not drop, but instead they are slowly firming it up. And they set the initial lows and the highs, then they are expected to make further rise during that of the European session and make a little bit of profit booking move towards close of the European session, and then start gaining the levels during that of the US session. And next week again they are expected to make further gaining moves in the market. So overall you will come across less drop and more rise moves happening in the market. So gradually you will come across the US dollar weakening sentiment prevailing in the market. So as I explained that from that of the beginning of the year, that the players continue to hold low, make lower level consolidation with frequent downward stop end in order to accumulate the buy position, and then try to shift the trading zone to that of the middle level. That is what they are trying to do now. So by end of this month, we will come across the shift in trading zone to that of the upper level. And then they will continue to gain the levels in the month of April. And then they will do the middle level consolidation with either way stop ends. So market is going to be an upswing. Avoid taking sell positions in the market. Now coming to that of the levels in which they are expected to make the swing, Euro is expected to come down to 1.0675, it came down to 1.0604 and then started gaining the level. So far they have set the high as 1.0775, and during the course of the European and US session, they could go further upward. In the case of GBP again, it came down to 1.2109, even though the expected low was 1.2175, and then gained up to that of 1.2375 yesterday. And today they are expected to breach the high and go above that of 1.24. Then in the case of yen, they came down to 112.91. The expected low was 113, and they went up to 115.19 on Monday. They are expected to gain the levels again when Euro and GBP are gaining, as you see that contrarian move is happening already. And then they will slowly go to 114 and above. Then in the case of CHF, they came down to 99.52. The expected low was 99. The expected high was 1.0125. They went up to 1.0114 and then came down. And they're expected to breach the current low, what they set, go to 0.99 area and then start gaining again. Then in the case of Canadian dollar, it went up to 34.71. The expected high was 34.75, the mathematically derived level, and came down to 72.76, and they are holding around that of 73, and slowly it is expected to come down to 1.31 level. Then in the case of Australian dollar, the expected low was 75.50. They came down to 75.34 and already set the high as 77.16, and they are likely to breach and go above. So in all, you have seen that the market is honoring the mathematically derived levels because the players cannot do anything else other than making specific type of moves within the limits what is being prescribed for them. Then now we will do the market reading. I have noted down the initial lows and the highs around 3:30 GMT, and we will now compare it around 5:07 GMT and find out where exactly the market is heading. Now in the case of Euro, 1.0762 was the low and 75 was the high. They have not breached the low or the high. Then GBP 1.32344 is the low, 2363 is the high. They are not breached the low or the high. Then yen again, they are not breached 113.28, 113.50. You see the spread is also very narrow between the low and the high. They are just consolidating in a narrow range for want of volume and also for to test the patience of the traders. Then CHF, the low is 99.60 and the high is 99.67. They just breached the high by 1 pip and gone to 68. The spread is just 8 pips now, so it doesn't signify anything. Then Canadian dollar 1.3309 is the low, 1.3326 is the high. They are not breached it. In Australian dollar, 76.64 is the low, 76.84 was the high. They just breached the high, went up to 76.90. So you come across that Australian dollar breached the high and staying above. Normally the commodity pairs lead the rally and lag behind. So that is what you come across now. They are showing some activities in the commodity pairs to start with, and later on they will come to the majors and the yen. And USD CHF could make sideways move during the day. So the trade calls for the day, near that of the low 1.0765, you can try to take a buy with the hedge order at 730 and take profit around 820 when they are making the rise. Then in the case of GBP, 1.2340 is the could be the buy level around that low, and they could reach above that of 1.24. You can watch and close with a profit. 1.23 could be the hedge order. Then in the case of Australian dollar, 76.60, we can keep the buy limit order in case if they don't drop again below that of the 76.84, the initial high, for more than 30 minutes, then we may be modifying the buy limit to the higher level and try to buy. Then 77.30, we can keep the take profit order. 76.30, we can keep the hedge order. Then this is the market timing. So as the daylight saving system is on in US, you find that US session is from 13:30 to 20:30 GMT. The gap time is 13 to 13:30 GMT. So European session is reduced by 1 hour till next week. From 26th onwards, you find that Europe is also going to follow the daylight saving time. Then afterwards, you will come across the European session will start by 7:30 GMT up to 30 GMT. So my next webinar will be on Monday. Coming Monday, I'll give the forecast for the next week, the following week, 20th to 24th of March. We'll come across more aggressive gaining moves in the market. My contact details are given here. If you want to contact, you can do so. Then I will answer the questions which are asked here. Then has got a question. Is it going to be an aggressive day as it was Wednesday? I know there is data released today of the same kind. Yeah, there will be an aggressive gaining move during that of the US session, and they could gain initially during that of the early European session and then make some profit booking move and then gain again during US session. See, it is not necessary that the data release is a must. They use data release time as the trigger time, but if they are trapped, the short sellers at the lower level, and if they continue to hold a higher level, making new highs frequently, it indicates that the short sellers are waiting for the market to come down. In such a situation, irrespective of the data which is going to be released, they are expected to gain the level and induce the traders to go in for a short covering. So we could come across aggressive gains happening in the market from the European session. Any other question, please? Avoid short selling. So we can just buy whenever there is a small dip near the low. And below that of the initial low, they may not drop very big. Probably they may do stop-ins in one or two pairs. Because all along yesterday, they have not made the drop. So it is very unlikely that they could make a drop. And before that, they will gain the level and induce short covering. Because it's a great opportunity for them to book profit. How? By gaining levels and inducing the short sellers to do the short covering. Shall we expect gold to rise? Yes, gold and crude, they are also expected to make significant gaining moves. So I will show the forecast sheet. Dip and rise during that of the Japanese session. Then swing and slide during that of the European session. And after the rise, they could make further rise during that of the early European session as an upward swing, and then make some slide as a profit booking move and take out the stops if needed. Then again start gaining the levels. That's what expected. If there is any question, I'm willing to answer those questions. In the levels, you can see how these derived levels are really helpful for you to do the position trade. Take whenever it is closer to the low, a buy position, and wait for the peak rise to happen, and use the trailing stop to book profit, or aim at least for 100 pips. You should be able to get it, because they are making narrow range consolidation of about 100 to 150 pips in the market. But once they come to that of the middle level, their gainings in a week will be more than 350 pips in the case of Euro, 600 pips in the case of GBP. That sort of moves they will make, and 450 pips in the case of USD, USD CHF, and also USD CAD, and 300 pips in the case of Australian dollar. They are all the permitted levels. These are all the initial lows and the highs. We use it in order to find out which way they are trying to gain the levels. At the moment, they are not breached the low or the high. So market reading does not indicate much significant think that they could gain the levels, but the forecast says that they are expected to gain the levels. And we have seen that only Australian dollar, they just breached the initial high and still holding above 76.84. So normally we know in the market that the commodity pairs lead the rally and lag behind. So the upward move is guaranteed. Small dips are buy opportunities in the market. So no more question coming up. So probably I'll just wind up the webinar. So I take this opportunity to thank FX for the facilities provided to present the webinar. I'll come back on Monday, come out with the forecast for the next week. We'll come across more significant gaining moves in other majors. So watch for it. And the denominator currencies are expected to make US dollar weakening move followed by that of contrarian move. That sort of moves we could see in coming days. Wish you all the best in your trades and the weekend. See you on Monday.